Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 12th of April 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the price moves and the overnight changes to be aware of. And we've seen the euro resurgent against the US dollar, up by 0.38% over the last 24 hours against the US currency, taking its weekly gains to 0.72%. So a pretty decent bounce from the euro off of its recent lows. Weakening, though, against the US dollar, the Japanese yen down by 0.25% against the US currency to trade at 111.93, moving ever closer to that round number of 112. We haven't seen the yen weakening like this for some time, so that might be a trend to watch over the next 24 or 48 hours to see if that can continue. Looking elsewhere on the table, the Canadian dollar's been strengthening again against the US dollar, up by 0.25% against the US currency overnight. Elsewhere, commodity-related currencies are also moving in Africa. The South African rand took 0.08% off of the US dollar overnight. That's off of its best performance yesterday, but the rand is still below that key 14 handle at 13.9867 and up against the dollar by around 0.7% over the course of the week. Dollar index for its part down by 0.19% over the last 24 hours and down by 0.42% over the course of the preceding week. Okay, what's on the calendar then? Events that may move the markets today. Well, we've already had some interesting data out of Asia Pacific and Europe this morning. We'll focus on the Chinese data that came out around 10 to 7 GMT this morning. That was balance of trade and exports and imports data for the month of March, and more on that a little bit later on in the video. To come at 9 AM GMT, we'll have industrial production data out of the Eurozone for the month of February, both month-on-month and year-over-year data here. And at 12:30 GMT, we'll also have US import-export price index data for the month of March, a chance to look at how inflation is affecting the US trade balance. And then at 1400, staying in the States, we've got the influential Michigan Consumer Sentiment Index data for the month of April. And then we pause until 1700 GMT when we'll get the Baker Hughes US oil rig count, a look at the number of active drilling rigs operating in the USA. At 1800, the day's sole central banker speech, this from the Bank of Canada's Lane. And then at 1930, if you're still in the market, we'll see the release of the Commitment of Traders reports for the current week. This data obviously compiled by the CFTC. Okay, breaking news and comment then that's caught my eye overnight. And first of all, China's balance of trade data blew past forecasts with a surplus of 32.64 billion US dollars versus expectations of just over 7 billion. So a massive beat there. Exports rose by 14.2% year over year, doubling expectations, or effectively doubling expectations of just 7.3% growth. So some much better trade data from China, which sort of tallies nicely with the pickup in PMIs there that we saw recently. Meanwhile, Spanish inflation is running at 1.3%, the March data shows, obviously well below the ECB's 2% target, but not falling at the moment, which I suppose is a plus point for the Spanish economy. The Reserve Bank of Australia has said that it is alert to the ramifications of a housing downturn and the possibility of negative equity in the Australian housing market. And US Q1 2019 earnings season gets underway today with numbers from JP Morgan ahead out of the US Open. Okay, food for thought and something to take away with you into the trading day and beyond, and why not think about this? As it is the start of, or the unofficial start anyway, of Q1 earnings season for the US, I thought we'd take a look at how the market is set up there. This data and chart is from FactSet, published as of last weekend. So we're looking in terms of overall earnings for the S&P 500 over this current quarter, or current reporting quarter I should say, of negative 4.2%. If 4.2% is the actual decline for the quarter, it'll be the first year-over-year decline in earnings for the index since Q2 2016, so almost 3 years since we saw something like that. And in terms of valuation, the current forward 12-month P ratio for the US 500 index is 16.7 times. That means that the ratio is above the 5-year average of 16.4 times earnings and well above the 10-year average of 14.7. So the question is, will a weaker earnings season justify that multiple, or can we expect to see US equities sell off from here? It'll all be in the numbers, and they'll of course all be revealed to us over the coming days and weeks. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly. Thank you for your time today.